You've got bear markets where, you know, if the economy's struggling, then cryptocurrency tends to go down. You've got bull markets where cryptocurrency increases because the economy's great. So over the 5-year period, I'm sure we'll see ups and downs in that regard. 15 grand into cryptocurrency, I think over the 5 years, I could easily double that.
It's fastest growing towns in the UK. Cambridge has grown in population by 18%. Peterborough, 15%. Milton Keynes, 15%. Exeter, 14%. There's huge investment in town centres, huge investment in hospitals. If there is, and you see a growing population, well, more people will follow. Success breeds success.
You know, there's talk of a Tesla mobile phone. There's talk of potentially a Facebook mobile phone. You know, I just think they're going to try and take the markets, their easy pickings, because they've got the power to do it, and Apple would be the most logical place to go and do something like that, which would double, triple, quadruple their stock value if they did crack that well.
Ladies and gents, we are back for another episode of the Investors Corner. Today I'm joined by Mike and Ian, and in this episode we are going to talk about investing 50k over the next 5 years. So gents, I'm interested to know what you've got written down. We've all got stuff written down.
You gave us homework, Andy.
There was homework, yeah.
We've done a bit of prep on this one.
I did mine on the way in. And it was like a flashback, frankly.
The kids have just gone back to school, so it's like readying us for the kids' homework that we have to help with.
It was like being 14 again and doing my homework in registration.
There you go, professionals on this podcast, aren't we? Good prep.
I'll put my hands up. I did ask chat. I did go AI. I did ask chat, and I didn't understand anything it said, so I scrapped it.
You're not the only one.
I went with
I did ask a bit of chat as well. I think Mike's the only one that's done the proper homework. So
I use chat for my stats.
Like global reserves, and then I was like, I'm not in America, so I'm just going to do this authentically, like I should do. But no, it was actually quite a good project, to be fair. I quite enjoyed it. And
I think it's a good one to have, isn't it? We talk a lot about property and accounting and taxes and all of that sort of stuff for investors, but I thought, well, let's see what we'll put 50 grand into and see what the comments come in, whether we're numpties or whether we're...
on the comments, we're all numpties. It goes without saying.
Numpties, comments from numpties.
It's kind of like everyone's got an opinion on the property market. Everyone will have their own opinion of that. And I think rather than commenting something negative on one of ours, share us with us what you think, because it's interesting. There's no right answer to this. You can't complete it unless you actually leave the podcast, put 50 grand on something,
and then come back in 5 years.
And let us know with the evidence of your bank statement. That's the only way you can really complete it. But the way that I kind of structured it was, I went, right, what's the goal over 5 years, and then what's the plan, and then what's the risk versus reward window for those plans. That's the way I did it, basically.
So you've gone proper into it then?
Yeah, I
proper
like
structure.
I like to excel on expectations, Andy. You'll learn that about me, so.
Well, as expected, I've gone on stats and stats only. Okay. Goes without saying if you've spent more than 5 minutes listening to this podcast over the last 3 years.
Yeah, mine's more just plump the money in and see what happens.
Into crypto.
Black or red?
High risk. Done.
Straight to the casino.
I just need more of those comments. What's that guy talking about?
What was your plan over 5 years? What did you guys think was realistic? Because 50 grand for people that have got young kids that have been in careers for 20 years, 50 grand, really what that should be is, I've got 50 grand that I'm going to not gamble on, but if I lose it, I lose it. But there's no point in going, right, over the next 5 years, I'm going to invest 50 grand to try and turn it into 65, is there? That's not really the target here, is the way I looked at it. So I kind of went, over 50 years, how could I potentially double it? Is what I looked at as a kind of like, sort of risk and reward. Can I double 50 grand in 5 years? And if I was to do that, how does that look? And that was kind of my thoughts. Did you guys do something similar, or
not far off?
The way that I had it was that I've got 50 grand spare cash.
Yeah.
Mm-hmm.
Doesn't matter whether I lose it or not, because I'm still securing
outside your pension, your family. You're not gambling your family's safety on this.
Exactly. So this is just spare cash, and I've just gone invest it in different certain things and look to, like you said, double it over 5 years.
Go on, I'm excited by yours, Andy, based on your
Well,
intro.
you know what I've done?
Just-
I've obviously gone the high risk route.
Yeah, I can
and
tell.
just thought, do you know what? I'm just going to plump it into high risk investments, leave it and see what happens. I'm going to keep the money in these investments for the 5 years. If it makes losses, it makes losses. If it makes gain, it makes gains. So,
How many watches are you buying?
That's not high risk.
what?
It's pretty risky to me at the moment, the way that people are losing money on it.
I'm not buying any watches. Don't worry about that.
Cool.
Right. So, first things, what do you think I've got first?
Crypto.
Yeah, exactly.
Yeah.
Exactly.
One that I can't pronounce, Erythium or something.
Ethereum.
Yeah,
Ethereum.
told you I couldn't.
Bitcoin.
So I've gone straight into crypto. So I thought I'd take 15 grand of the 50, so 30%.
Oh, right, okay.
I'm going to put it into the crypto. Obviously, the crypto is sort of as high risk as it gets, really.
A particular coin or?
I think all of them, really, aren't they? I mean, Bitcoin and Ethereum aren't as much as high risk, but I think if you're going to put your money into there, you're not going to see the typical returns from just a start-up coin that's gone into the market.
Well, the horse is bolted on those.
Exactly.
We think, mate. We'll
wouldn't
call me back in
surprise
5 years. I don't know.
It wouldn't surprise me. You might see Bitcoins.
I was about to say it has, but I'd just totally withdraw that comment.
Yeah, I
frankly.
mean, it's extremely volatile
Yeah,
market. But
yeah.
I think the 15 grand that I would put in, I think I would put into pre-sale coins. So coins that are coming onto the market, that have got a good community behind them, that have got good research into what they're doing, and are they offering something different to other coins that are currently on the market, and then leave the money there and just let it ride. Obviously, you've got bear markets where, if the economy's struggling, then cryptocurrency tends to go down. You've got bull markets where cryptocurrency increases because the economy's great. So over the 5 year period, I'm sure we'll see ups and downs in that regard. But I think if we put 15 grand into cryptocurrency, I think over the 5 years, I could easily double that. So I'm looking at 35k returns over 5 years in that crypto.
So it could be worth 5 grand because it could,
Yeah.
plummet, or it could be worth that higher reward. It's somewhere in that margin. It's
It's somewhere there because, I mean, you've got to get in when it's obviously a bear market, when they're going down. And then typically a year after that, it increases. The year after that, it goes down slightly. Year after that, increases. So it's quite, every year it goes up and down. But by the end of the 5 years, we should be in that sort of bull market where everything's increasing, and we should see a better return on it rather than not. Obviously, don't take that as gospel advice.
Yeah, disclaimer there from Andy.
It might not happen.
On all of this disclaimers, so there's 15 grand for you. Mike, what's your are you putting it all in one place, or are you?
Well, I had 3 options, but I hadn't broken it down of what I was going to do. I had 3 options for investing. My first one, this is something we've been looking into this week: serviced office accommodation. And when I say serviced office accommodation, I mean office floor or building that has been broken down into small month-by-month rolling contract offices where small companies can move in, Wi-Fi set up, reception's set up, everything, desks are in, chairs are in, and someone just walks in, plonks their laptop down, starts working. Reason being, since the pandemic, can you guess the growth in demand for serviced office accommodation? I'll tell you.
I can't guess that.
173% increase in demand for small serviced office accommodation, and an occupancy rate, according to Chat, 88% in sort of London and the greater southeast area. So from my view of commercial agents, advertising is horrible. So if the average occupancy rate is 88%, I reckon I can beat that because I'm quite good at advertising and marketing stuff. So that was my number one. What would I do with some money? Is chase a growing market, which is serviced offices, because people don't need the great big office footprints, but they do need somewhere to work from.
And what would you do? JV with someone, because obviously 20 grand or whatever.
Yeah, leverage it with mortgage finance, because commercial rates are coming down just like buy-to-let rates.
Yeah, but in terms of the deposit, you'd have to go in with someone, right? Because you couldn't buy something with 20 grand, maybe 50.
With 50, 50, I've been putting it all in.
50
yeah,
straight in.
Why not? It's one of my 3 options.
Cool.
Nice.
Like that.
Ian, what you got?
I got 20 grand allocated for this. So the plan number 1, I got 3 as well on there, but 20 grand into business startups that would either sit within app development, subscription, or a small tech development. So effectively, I'll be putting 20 grand at a geek to create a business, and I'd help them with a little bit of the business planning, and they'd do the geeky part of doing the stuff that I can't do. But tech, app, subscription led, I'd kind of effectively back someone who might be in their early 20s that's just left uni, that's got a really cool idea. And the way that I kind of put that out into the world, I think I would I Dragon's Den it a little bit, like get something lined up where I'd have 5 or 6 people pitch an idea to me, and then
small town venture capitalist.
Yeah, like on a small level, like really kind of go, right, I can put 20 grand into that, which gets you off the ground, because you need like £300 a month to live after uni, and see how that unfolds. Again, I kind of looked at that and thought, what could that turn into? Could be minus 20 grand, so could lose the whole 20 grand on the venture over 5 years, or potentially it could be worth 200 grand based on a 10x of that investment. So that was my biggest gamble of the 3, but at the same time, something that I think in this climate, in this sort of economic environment, and the way that the younger generation are thinking, that's where I would sort of back someone on that, basically. That would be number 1.
Yeah, looking at my number 2, I've gone startups, so I'm putting 15 grand in startups, which is sort of similar to yours, really, or businesses that are failing now. Obviously, with that, it's sort of a high risk, because a lot of startup businesses fail if you look at the percentages. But I think that is the area where it's got the biggest return on your investment.
Yep.
Especially over 5 years. Years 1, 2, 3, you might not see any return because you're getting the business up and running, you're investing in other areas. But yeah, years 4 and 5, you've got to be looking at a profit after that, or a big exit. Obviously, if the company's there and you look to exit that business, then you're going to get a huge reward for that. So I've done 15 grand into startups, and by year 5, trying to look at about 60 grand on that, with either an exit or a big event happening within that business.
Yeah, that's fair. I think it's similar to what I've said there. I've just maybe been a bit more strategic or specific, with what type of industry I would want that startup to be. But I think it's sensible to invest in business, especially with the amount of kind of solo entrepreneurial type people that are in their early 20s at the moment. What was plan 2?
Well, you've essentially just mould those 2 together, and that was my number 2. So I'll just go straight on to number 3. It's put some money behind someone who's got an entrepreneurial idea. Is put some money behind them, because there's a lot of people out there with an idea, but absolutely no idea or capital to actually to put it through. So I'd absolutely 100%, if I had money to burn, shall we say, I would 100% do that. So the next one I had, and this is very standard, very basic, US stock market. Okay, reason being, last 5 years, the S&P 500 has grown 89%.
89%?
Yes, a few raised eyebrows in the room.
No, it doesn't surprise me that. Yeah, because I've been, as I said before, I've been dabbling a little bit with a few quid in stocks over the last kind of 2 years, shall we say.
Yeah, it sounds super basic, invested in the US stock market, but say, we get the crystal ball out, Trump wins, Trump for business and all this, that and the other, what's expected is another bit of a rally, isn't it? If he walks through the door, because He's supposed to be the man for business. So we've got his tenure to see maybe another 89%. I don't know what the predictions are, but if the past is anything to go by, investing in the equities and stock market, it's not a stupid place to have some of your money.
Yeah, no. Yeah. I'm aligned. I've gone specifically 10k in Apple stock, rather than just sort of leaning it out there in different.
Is that based on like the use of the people in our office?
Well, I've got a thought about this, and I think if I was in Apple in business strategy, where they've kind of done a phenomenal job with the market for laptops, tablets, and mobile phones, and other devices that they've got out there. How do they? They're such a huge company globally that they're going to have to get to a point soon where they crack a new market that lends itself to their market. And I just feel that the way that like mobile phone coverage and internet coverage is so rubbish at the moment with the big players across the UK or across the US or whatever, and it's so specific to each country, like the US mobile phone coverage and the UK are so different in terms of who the companies are, that Apple could easily globally do a better job of that. And if they did, I mean, that's where crazy money is on a monthly reoccurring.
Yeah.
And if they did do
subscriptions
something like
again,
that,
isn't it? Yeah.
That's if I was sat there in Apple strategy, I'd be thinking, right, how do we do that? How do we crack that? And I just think those big four players, those big tech giants, Meta, Apple, etc., Amazon, I just think they're going to start to take over the world in other areas, rather than just their specifics. I think that's what they will do. There's talk of a Tesla mobile phone. There's talk of a potentially a Facebook mobile phone. I just think they're going to try and take the markets that are easy pickings because they've got the power to do it. And Apple would be the most logical place to go and do something like that, which would double, triple, quadruple their stock value if they did crack that well.
No, I totally agree. I've got big four tech stocks here at 10 grand.
Oh, we're very close. We didn't, just so that people know, we did not.
We did not confer.
We did not copy each other's homework.
Together.
No.
But yeah, I mean, that's pretty a safe bet for me, putting 10 grand in there and looking to potentially double that investment over 5 years. I mean, like you said, they're looking to take over the world. I mean, all of the tech that's coming in, what Apple are doing, what Meta are doing, and all of the new stuff that they're bringing in, it's just going that way. Everything's tech driven, or going to be tech driven.
It's essentially the new world. If you look at 100 years ago, the wealthy people were the landowners. For the next 20 years, the wealthy, the very super wealthy, and even now they own the land in the virtual space, don't they?
Yeah.
So they're the people who own the wealth, and everybody else is a tenant of it, frankly. So if Apple take the service market as well as the hardware, whatever you call a mobile phone market, then they've got it wrapped up, haven't they?
Yeah. And the thing is, if there's anyone coming up behind, and they've got a product or something that's really taken off, and Apple wanted to integrate it into there, well, they'll just go and buy it.
Yeah,
they'll just buy it. Yeah,
100%.
before it becomes a big threat.
Yeah. Well, it's only worth a few billion.
Yeah.
Yeah, well, you see it with Meta. As soon as anything rivals anything around,
just buy it.
Just buy it. Oh, WhatsApp would just buy it.
They did that with what?
Instagram
as an example.
Instagram, WhatsApp. Yeah.
Podcasting. They just went boom, boom, boom. We'll just take it.
Have it all.
Yeah.
It's a nice position to be in, isn't it?
Would be.
Yeah, it's like a hungry hippo. Someone's just pressing that butt flap. Anyway.
Going off subject there.
Third.
Yeah.
What's third on the list?
Well, I extinguished mine. My one
I'm on
that didn't.
4 now.
My one that didn't quite make the list to give a third is fastest growing towns, because this is essentially a property podcast. So I thought I'd keep it topical. Yeah. Over the last 10 years, fastest growing towns in the UK, Cambridge has grown in population by 18%, almost a fifth. Peterborough 15%, Milton Keynes 15%, Exeter 14%, Northampton 13%. There's some big growing towns out there that aren't wildly expensive to get into. So look at why they're growing. Is it that classic, there's huge investment in town centres, huge investment in hospitals, huge investment in business parks, and if there is, and you see a growing population, well, more people will follow, because success breeds success and all that.
Yeah, sensible. I'm on property for number 3. Put 20k into a JV on something that we would effectively refurb, rent, and then flip or refinance, at the 5-year exit plan, basically. Just a safe, simple way that I know I'm not going to lose on the 20k. The other ones, I could lose the whole 20k and invest in business. On the Apple stock, maybe I could lose 50% of it. It drops down to $5,000 worth of value. On the 20k, I've got to be a bit stupid to lose anything of the 20k over the 5 years. So worst case scenario, it levels out as the same. Best case scenario, I double the 20k or a little bit more, really. So that was my kind of my safety net bet, bearing in mind that I've been in property for 21 years. So yeah,
should know a bit.
Should know slightly what I'm doing. I'd probably JV with someone in the trade world. And yeah, in some of those sort of markets that you talk about outside of the home counties, there's no reason why it potentially couldn't be a commercial unit as well, but most likely a rental unit, a resi rental unit. So that would be where I put that last 20k. What about you?
Last one for me is 10k into an S&P fund, average about 8% return.
Yeah.
Year after year. So I'll just leave that there and let it do its thing. For no property for me.
Yeah, let it make $3,000, $4,000 over the 5 years, sort of as a safe one.
So this is going out pre-budget.
Yeah, yeah.
This
change.
This podcast may
It will
only last
change.
5 minutes and then explode, depending on what the budget says. End of October, I believe, D-Day, isn't it, for the
What do you
budget?
reckon is going to happen on that? Taxes raid?
Everything raid. I don't know. In all honesty, I've spoken to different people. Everyone in every industry seems to think their industry is going to get hit, which is quite sort of narrow-minded thinking. It's like, they're going to hit me, rather than that kind of knowledge on it. But what interests me is normally sort of well-versed financial advisors, that kind of thing, have a really good idea of what's going to happen before it happens. Because it's just leaked everywhere, isn't it, frankly? Whereas I think this time there's been so much chat and so many ideas thrown out by think tanks and Labour when they're in shadow position that people aren't really sure where it's going to land. So, a little bit hesitant on advice of what to do with wealth, particularly. And I spoke to a guy who owns a number of accountancy businesses start this week, and he said the number of inquiries he's had for moving business and assets overseas has grown from something like one a month to 3 a week.
Doesn't surprise me at all.
Which shows the fear in that kind of middle class. We own a small business. We need to protect ourselves, otherwise we could really lose out. Rather than we're not talking about the big stuff here. They're already an island.
I feel in my guts that we might be a little bit surprised with a relatively boring budget. I don't think they will shock the world with their budget like people are fearing the worst. And I think the lessons of the trust budget coming into power and then throwing a huge FU at the last people by completely U-bending it, even if that was positive moves and positive things that they put down, will just cause a media frenzy and just an economic downfall, because they'll just jump all over it. And I think we won't see one of those. And I think they will drip in these changes over a period of a year, but I don't think they'll drop a grenade in October.
It's a 50-50, isn't it? Is the bark worse than the bite, or is this their opportunity to drop all the bombs and blame someone else to spend the next 4 years making it up before they next have to come to voting?
It's going to be interesting what he does. I mean, he's already come out and said that it's going to be painful.
Well, that is that Ian's suggesting
So
that the
it's
bark
just-
is worse than the bite.
Yeah.
Yeah.
So when it actually happens, it's not that bad.
Yeah.
Yeah.
Yeah. Someone once told me that if you get a tattoo, it feels like having a Stanley knife cutting through your leg. If you get a tattoo, it doesn't. So
No.
they're just setting expectations prior to the actual operation in this case. And I actually think it might be a little bit more boring than people think it will be.
Yeah.
I don't think it will be quite as crazy as maybe things are being portrayed,
I'll
because
take that.
that will keep things feeling a little bit more stable and a bit kind of, rolling forward. And over the period of summer, things across the board are kind of just sort of stayed relatively normal. I know there's a lot of issues here, there and everywhere, but yeah, I don't know. I think we might be surprised that it's not surprising, if that makes sense. But we can't forecast it, and I've just put that on camera, so I could be very, very wrong in a couple of months' time.
Austin will have clipped this up, ready to go.
Yeah. But no, I think a good exercise with the 50k, and I think what it shows is if you've got that excess 50k and you really think about it, between us, we've come up with quite a lot of synergy there, which probably doesn't surprise people, but we do have quite different outlooks in how we potentially would do things. So to bring it back to a kind of core similarity, that makes a lot of sense, actually.
Mike, so in reality, with your investments that we've talked about, what do you reckon you could lose, win? Where are you going? Are you winning on everything?
Well,
What's your highest risk one?
Over a 5-year period, I don't see investing in the stock market as a massive risk. Over a 5-year period. Obviously, if I'm told I have to sell on the last day of the 5th year, then it's out of my control. But generally speaking, over a 5-year period, I expect to see growth. Serviced offices, 88% occupancy rates, increasing in demand. I can't see, again, that I lose money within serviced offices. So the highest risk, but the highest reward, is throwing money at someone who's got an idea. Because it honestly, we've started businesses, we've read and we've done well with them. We've registered businesses, and we just haven't done anything with them because we just haven't got that either momentum or passion or belief or whatever it is, and it just gets shelved because something else is happening at the same time. So it's got to be in the startups is my biggest risk, but I don't see that there's a risk in providing office accommodation where there's demand for it, or investing in a broader stock market investment.
Yeah.
Ian?
Yeah, I calculated it as I could be left at the end of 5 years with 25 grand out of the 50 or 270 grand.
Broad range.
Yeah.
That's a range.
And that's because I put 20 grand into business, which I could lose all of it, or I could 10x it to 200 grand. I put 10 grand into Apple stock, which could go down to 5 grand and lose half of it, or I could triple it if there's big moves with Apple to 30 grand. And then on the JV, I put 20 grand down. The worst case scenario, I still have 20 grand. Best case scenario, I double it. So it's the safer but less reward option being the JV in property, which kind of leaves me with 25 to 270 really if it all went well. Realistically, I feel quite comfortable if I did that I'd double it to 100 grand in a roundabout way. So that would be my thought.
Nice.
Might even do it after this. Might just press the button.
Spare 50k straight away.
Yeah, just bang it straight in. Yeah.
Nice, like it. Well, I'm making money on everything.
Okay. That's the
belief. Yeah.
Thanks for watching.
I'm winning.
I'm making around 35k on crypto. About 60k on a startup.
I don't think you can guarantee that.
You've twisted the question.
No. Don't worry.
On the Homer Simpson coin, you can't guarantee that.
I'm not guaranteeing it.
Dog food 101 coin.
I'm expecting to earn these amounts. 60k, 20k on the tech stocks, about 15k on the S&P. Final portfolio value of about 130k, 84 grand profit.
What was the
Thank you very
biggest
much.
risk?
The biggest risk.
That was.
Oh, was that the question? Yeah, I asked the question.
Yeah, you twisted
All
it.
Right, biggest risk is a startup
brilliantly
for
to
me.
show how brilliant you were.
I think it has to be the
The
startup.
startup is the
Because that can go to zero very easily.
Yes.
With the wrong person. So,
Mind you, so can crypto.
yeah. Yeah.
I'll have two. I'll have crypto and startup. That's 2 out of my 4.
Yeah, the crypto one's interesting because I still feel we need to get a guest on to talk about that in more specifics. I think that's something that we need because it could be
We'll
a way of
pixelate your
life.
face if you want us to.
What's
It's
happened
quite
with Russia
shady.
with the crypto? Because obviously they brought their own coin in and kind of almost said
What
that-
does happen in
that's-
Russia?
That's the way it's going to be. Is there any research done on that? We need to look into it really because they were the first country to kind of go right. This is our power play now.
I tend to stay away from typing Russia into Google just in
I'll ask
case
chat.
in case something pops up.
Yeah. Oh dear. Right, it's a great way to end this investing podcast based on Russia, I think. Putin, if you're listening, thanks for watching the episode. Thanks for watching the show. And we are sitting on the fence with what you're doing. So just leave us alone, please, to crack on. We'll be back next week. Guess next week or a different topic, Andy? What's in the schedule?
Do you know what we're doing? Next week, we are doing must-reads for landlords.
Okay.
So books or newsletters or anything like that, not for landlords, for investors, sorry, that you'd want to read as an investor. So it could be things about mindset. It could be things about dieting, exercising, or where to put your money, investing, how to run a buy-to-let business, etc., etc. So yeah, just must-reads on different areas, really, which should be an interesting one.
I'm on a mailing list actually that it's not often I get an email every week and open it and read it, and I'll share it on that episode which one it is.
Lovely.
That is a must read for investors. So yeah, check us out next week. We've got an exciting one done. Comments, thoughts, slaughter our ideas. We don't mind. It helps the algorithm if you do, or if you like any of the ideas, rank them. We put sort of 9 across the group of us there. Some overlapped, but rank them if you want to from 1 to 9, or give us your top 3 out of our suggestions. That would be fantastic. Thanks for listening. We're back next week.
Bye-bye.